No. Alright. Um so it's what day? It's Wednesday today. And we got news in the afternoon. We got NFP or NFP. Yeah, we got NFP and at 8:15. We got employment cost index at 8:30, and then at 2 p.m. we have FOMC statements, federal bonds rate, and another FOMC press conference at 2:30. So I'm gonna do my analysis and kind of what we're like expecting the rest of these days. I took a few trades yesterday and Monday as well. Took like a few losses, didn't really make up with that, so it's like a losing day. So whereas Monday was the 29th, so 29 here. So took like a lot of trades on Monday actually. But took a few losses, took a few wins, but I'm actually down now. Like I don't even know, like 0.5% or something. So I just took my last loss there, and then went off the charts. Just looked at the charts just a few times, but didn't do anything. So I was waiting for like the rest of the week, and maybe I won't even take a trade because of NFP. But we'll see what this week brings. IST says he doesn't gonna take a trade, but maybe I won't either. But I'll see what happens. If the drawn liquidity is clear, then we'll see what that brings. But let's see what let's see at let's look at the analysis right now. So we did sweep buy side there. So we made all-time highs on NQ. Let's put on ES here. Alright, so we did sweep all-time highs on NQ. We did have this displacement, and we did have that. We do have an SMT here with ES. So we took that high already. So you could see this as an SMT. We're now breaking lower. We did have equal highs here on NQ as well, which I remember. Oh yeah, here you have equal lows here. We swept those equal lows, had like a push up inside of this liquidity void there. And now we're heading lower. So where could we go to? Where could we react? Where could we retrace off of? Because we are bullish, and if we look at ES, then ES is still bullish. So that's our move this here. ES is still bullish. We have actually, if you look at the monthly, then we already did respect that monthly order block. That was this right there. If you look at the low there, then that's the order block where we all reacted off of. We already swept that like years ago, or like 2 years ago, where we already swept that high. So this would be low resistance liquidity run on the monthly here. So that's buy side. Grab some water before I get more voice cracks. So on the monthly, this will be low resistance liquidity run, but because we did sweep all-time highs on on NQ, that's why we're getting that reaction. But the reaction shouldn't be that much. If we look at it, yes, then we do have that weekly order block, but that's for later. But yeah, if we look at NQ, then where could we go? Well, if you look at like a breaker forming here, then we don't have a breaker here because we had an SMT on ES. But we didn't have a breaker on NQ, so if you use like a breaker here or a breaker there, if you can see, this is a breaker. We have a swing high, swing low, swing higher high, swing lower low, swing high, swing high, swing low, swing high, swing lower low now. That would be our breaker as well. But first we just look at the daily, and we swept the buy side there. And we're reaching down here. I see 2 for value gaps, I make it 1. You can see there's still for value gap here, there's still for value gap there. 2 for value gaps here. So on the weekly, that would be 1 for value gap. But we're already inside that weekly for value gap, so where could we further go? Well, if you look, then there's a weekly order block here. So this would be where, so we wouldn't go here. So we could already look inside of this range here. So just this range, that's where we can look inside of now. So looking at order blocks that got disrespected. So we had, I know that's an 18-hour order block. If you look at the biggest time frame order block, then this here an order block with the imbalance there. And on the daily, we do have a down close candle here, but we don't have an imbalance here. Yes, we do have this volume imbalance, but I don't see that. I want to see a order block with a actual fair value gap. So I don't count the volume imbalance as I do count them as gaps, but I don't want to see them get used as order blocks. So here, you could say that this is your block if you want to make your own rules, but I've seen this work. And as you can see, this will be the actual order block mean threshold, and you can see we respect the mean threshold there all the way until that low here that got disrespected there, and then we're trading lower, of course. And that will be the order block, so that got disrespected. So now we look at the daily, because we want to get rid of the order blocks, and we want to look at time frame up, and then we want to look for equilibrium. So we have a swing low here and swing high there. Yes, there's a swing high here as well, but I'm using from basically the swing low to swing high of the range. So like this is a swing high, yes, but I want to see the highest high and then the lowest low from swing low to swing high. So if there was like a swing low here, then I would use that, and then I'll use, like, if this was a swing low, then I would use that range, but it's this range now. So I want to look for equilibrium. Let's put optimal trade entry here as well, because we're expecting like a retracement. So let's go further. Now we look for like a breaker. So on the 8 hour there's a breaker here, but on the 6 hour you can see it like more clearly. So there is swing high, already told that. So A to B lag. Let's look at like a projection. -1 standard deviation almost comes perfectly in line with like equilibrium. If you take it like the B to C lag, -1 standard deviation comes in line with like the order block. -2, -2, -5 doesn't really match with anything. Yes, it does line up with this imbalance, but not on this time frame, which I'm looking for. So I'm going to use it to the A to B lag, and I want to see at least equilibrium. Oh, I'm not going to use this one. It does almost line up with the 0.5 standard deviation as well. But what is most probable? Well, first we have equilibrium, then we have optimal trade entry, then we have the order block. So we look at like small steps. So the -0.5 standard deviation doesn't really matter, is nothing. So we don't have to look at that, but -1 standard deviation, equilibrium. So that could already be my target. Then we have another standard deviation we could make from this A to B leg, or this B to C leg from this breaker. So A to B leg, -1 standard deviation doesn't give us anything, -0.5, nothing. I'm mostly looking at the -1 and the -2, -2.5 standard deviation. If we look at -2 standard deviation, then we do again get put into this order block, just barely tap into that. So that could happen if we get it from the B to C leg. Then again the -2, -2.5 again goes in the order block, but it isn't matching with anything. So when I want to see it mesh with an order block, I want to see it just barely tapping into the order block, just like this, or like this. So just like barely tapping into the order block. Or I want to see mean threshold get like perfectly, like we get like, see, like we get like a perfect standard deviation like this, or this, like somewhere like that, or -2 there, -2.5 there, I mean, or -2 there. That's perfect. Like that's what I want to see, but not this. This is not really, doesn't really look like anything. Rarely I use quadrant here. So you could have it like that. Maybe it does line up with that like perfectly. You could see that, but I rarely use that. So further, daily order block. So this will be the daily order block as well. If you look at this range, and this would be the daily order block, but the daily order block is actually inside of that weekly order block. So that's why I use that, but you could mark it out as this as well. So we do have that daily order block, and then now we do have like that standard deviation perfectly lining up with that mean threshold. So we could have that there as well. But as you can see, we have this big range of this weekly order block. So we can't just ignore this weekly order block, because we could react off this weekly order block and then tap in all the way. But it's just like, what's the most probable? So -2, -2.5 standard deviation. What if this is the right standard deviation and we just react off that weekly order block just barely and then go all the way up? Then you have like your TP set here on that daily order block, while we're just using the weekly order block, just stepping in barely there and then going all the way up. It could happen. So even though this standard deviation does line up perfectly with this, I don't want to see it. It's like the last option as well. So we have like mean threshold here or this order block here. Basically, when we go further than this, like this range here, then I will expect that low, but I don't expect that low, so this standard deviation isn't like logical for me. So -1 standard deviation, I'm just using this standard deviation because it lines up with equilibrium perfectly. And a -2, -2.5 standard deviation lines up with this weekly order block perfectly as well. So I'm going to remove that daily order block, and I'm just going to use this standard deviation because it gives more PD arrays. It matches with more PD arrays. And if it lines up with optimal trade entry as well, I see that as a PD array as well. I don't see these minus 0.705 or the 0.79 optimal trade entry. What even is it? Like you could have these on as well. I don't see that as a PD array. Just the minus 0.62 level. So yeah, now we have this. So basically that's already it for NQ. If you look at like this range, which we had here, then we see like there's a big Ferrari gap here. We can make that a singular Ferrari gap. That will be on a 12 hour. We still have 10 hours for this candle to close. We do have this big gap here, this volume imbalance, but I don't want to mark that out. You just see it. This is actually crazy, this 2-day volume imbalance there. But we could totally fill that with like PM session or like NFP. But yeah, this 12 hour for Vega, basically that's like now it's a singular one. So we just marked that out as a SIBI. Basically that's all it for NQ. We do have this order block on the 1 hour. But I do expect us to go lower. We could react off this SIBI without tapping into that standard deviations. Like the -0.5, -1, we could just not tap into that, and that's we do tap in the SIBI and then go lower. But I do want to see for the target, I want to see equilibrium. But this is basically it for NQ. So if we get rid of NQ now, and we look at ES, and I look at NQ on the side. So ES going further, we have get more water. We still have that weekly draw on liquidity, which is buy side here on the monthly, which would just be a low resistance liquidity one. Then on the monthly, if you look at it like this, then there's like nothing special about this. But most of the time when there's like big wicks, or not even that big of a wick, but like here, this one doesn't count, but when you have like wicks on not all-time highs, but we do have all-time highs here, but like wicks on like a daily or like a weekly or like a 2-day, 1 day, or like a like a minimal of a daily, then those rejection blocks on like, let's say this one here doesn't really look that big, but mark that one out because we probably will get a reaction. Let's say it was here. Let's look at that. So it is on the 4 hour we're now. So reacted off, look at this. So that's like a really small rejection block, but because it's the daily, we do get a pretty big reaction. This is on the hour. You look how many displacement we got to the downside. Let's say you were not expecting that and we were expecting like the high. I don't know where the high was, like right here. Let's say you had your TP there, and then you had like a entry right here. I don't even know. But you get tapped into the rejection block, and then we get big displacement because it's a daily rejection block. It's not even that big, but because it's a daily, it does matter. So you gotta mark that out. So let's go further. So I'm gonna mark that out. I'm gonna look at the biggest time frame with the biggest rejection block. So if you go up here, let's look at another time frame. They're all the same. So I'm just gonna mark it out on the 12 month. So it's a 12-month wick. We're gonna get some reaction off from that. So I'm marking that out as rejection block. right there. So we have rejection block here and buy side on top of there. Now we look at ES and we look at the difference between ES and NQ. So in ES we could see there's this order block here. We actually have another down close candle, which is also not overlapping with this for value gap. So we look at the volume, look at here. So the volume of this is 573.71k and the volume of this is 787.185k. So you can see this has more volume. So this is our actual order block, and we mark this one out. So this is our order block, as you can see here as well. Reacted off of this perfectly. Look at this, like to the tick there. You can't say that of this. So right here, react off there, we get like a Judas swing up to the upside. I'm tapping into like a PD array, I don't even know, but we get displacement lower now. So where could we react off here? If we look at the difference between this and NQ. Oh, this is ugly. Crazy pink. All right. So if you look at like the difference between this and NQ, here. Oh, wait, where do I? All right, it isn't marked out. Let's just grab. All right, so where are we at NQ? So we at this high, low, lower high. And here, 112 hour. Then we look at ES and we have equal highs here. So we don't have an SMT here. So this would just be engineered buy side liquidity. So you could already see when there's like perfect equal highs or perfect equal lows on like bigger time frames, everything we're gonna create here, or every retracement, or just the retracement we're gonna have, and every swing or failure swing that we're gonna create is just engineered liquidity. We're gonna have like a huge market maker buy model, and we're gonna like react off a PD array. Maybe it's a mean threshold, maybe we're gonna turtle soup this, I don't know, we still have to do our analysis, but we're gonna have a big market maker buy model, and we're gonna take these equal highs because there's so much liquidity up here because of retail traders, or like support and resistance traders. So I can already tell we're going back to this. So now we're gonna look at ES and see where do we want to react off of. Well, we just swept all-time highs on NQ. We did have equilibrium marked out. We did have that order block marked out on the weekly. So let's say we want to go lower on the ES. Where was the order block? Oh wait, I said daily, but it's actually an 18-hour order block here. So let's say we do respect that 18-hour order block, then we go time frame up and we look at the range what we have from the daily. So in the daily here, there's no swing high here, or there's a swing high here, but we look at the range, which I explained as well. So we look at swing low to swing high. Now we can mark out equilibrium from here to here as well. We have equilibrium here. We could look at like a singular for value gap. I see for value gap here, see for value gap here, and that's it. So if we look at like a 2-day, then I see a singular for value gap here. So this would be marked out as our busy. Damn. Alright, wait, I'm gonna change something with my mouse. Alright, that's better. Alright. So, where was I? So we do have that busy on the 2-day. Then we look at like a standard deviation. Let's say we do want to respect this. Let's say we're really, really bearish. Then we look at like a standard deviation from this to this. Does it line up with anything? -2, -2/5 lines up with like the optimal trade entry. Do we have like anything else? B2C leg, -1 standard deviation. I don't see that as equilibrium. -2, -2/5 standard deviation. Don't really have that anything there. We don't gotta forget to mark out our order block. So on the weekly, we have this weekly order block. So does standard deviation line up with anything? Does standard deviation line up with anything there? This is like looking really really far in like the future. Is there anything to react off of there? Maybe we don't even want to go that low. Let's say we do want to turtle soup this orbital block low and then go higher. That could happen as well. We don't even have to tap all the way there. Because on NQ we're just in a 12-hour one. We have equilibrium here, we have an orbital block here, we're just at a 12-hour. So if we look at like a 12-hour here as well, and where NQ wants to go, we could just turtle soup this low because NQ is way lower already than ES is. Look at NQ here. So this is NQ. Look at where NQ is already, where NQ already is at. So we're already past this low. And ES isn't even past that low. So we could just react off this orbital block mean threshold and then go high. That could happen. Doesn't have to, but it could already happen because NQ is already way lower. We already have a big SMT. NQ already took this low out. So we already have an SMT here, but how low is ES gonna go? So yeah, if we do want to have that order block there, let's look at like another standard deviation. Already had that marked out. Let's look. There isn't a standard deviation possible here because we have equal highs here. So basically what I think is we don't even want to go this low. I'll just have it there, but I'm looking more inside of this range because we have engineered buy side liquidity here. If you look at like a singular for value gap in this range, 4 hour, still see 1 for value gap, 2 hour, still see 1 for value gap, or do we actually see a for value gap here? Small for value gap there. Or you go up a time frame to make it singular one. It's only 4 hour. We do have for value gap here. So as you can see, we do have this singular for value gap inversed. Inversion. We do have this singular for value gap inversed. So where would dodgy where would dodgy strategy basically tell us to go? Well, basically that's the first swing low. So that'll be here. This is our first swing low, so this could be our target. Where is that also like pretty close to? It's also close to the mean threshold. So this could be our drawn liquidity for now on ES. Almost tapped that constant encroachment of that inversion for value gap. We still could go there. We don't even have to go lower. We could also react off here. Damn. But because I'm bearish on NQ, I'm expecting bearish prices on ES as well. This could be a drawn liquidity. If you have like a standard deviation from like a smaller breaker, then I see the way Dewey. There are actually equal highs there as well. So this wouldn't actually be a breaker because we don't have a swing higher. But still, let's look at that. So my super 5. If you look at like a lower time frame, or like there is a time frame where these two candles are probably combined. Or like you could see this as A, B, or like no, there's no breaker there. This is now forced, so no, it's now, let's look at the high up here. 0.75, 0.75, it's the same. Look at like a 50-minute, still the same, still don't have a swing low there. But you could have just marked out because it does match with what we're like aiming for. -1 standard deviation does line up with that inversion for value gap low. We set the standard deviation perfectly there. Look at that. Perfectly there, and then had some reaction to the upside. So this standard deviation still could be right, even though this isn't technically a breaker. I probably do have a standard deviation, or probably do have an SMT there with NQ. So let's actually see. So that would make it valid then. So this is the swing high, and I want to see this swing low actually, and this swing low. No, but it's fine. It matches with what we want to see, so we use that standard deviation. We could just leave it on there. And our Tron liquidity for ES is now the sell side liquidity, and after that we gotta look at like what news is gonna give us, because news is probably gonna pump one way. Let's say news wanna pump us to this low and we wanna continue lower, then we do have that marked out, so that's where we could go. But further, this is already it. That was pretty, I would say, easy analysis for like NQ and ES. So yeah, we're waiting what AM and PM session and news files are gonna give us. And that's all basically it for NQ and ES. So further, I want to show like for the GBP USD, which I marked out. So I marked out this rejection block, consequent encroachment, because we didn't tap consequent encroachment there. So we still had liquidity at the, I wouldn't say liquidity, but like untapped, like an untapped PD array, which is right there, and we had like equal lows here, right there and right there. So we had sell side beneath there as well. So now we swept the sell side. We're getting like a displacement to the upside. If you look at like a singular for value gap, then the singular for value gap is all the way up there, because on the 1 hour we have one here, and then where do we? Alright, so on the 1 hour we do have a singular one there as well. Look at like 45 minute, yeah, on the 1 hour. So the 1 hour would be our singular for value gap, and that would be all the way here. So this would be the actual for value gap, which we would want to see get inverse. Look at that consequent encroachment tap in there. You can just, someone picks a 4 hour and you say, yeah, this is the SIBI we're reacting off of. Well, if you look at like the actual rules, this is the for value gap you want to target or want to see anything off of. That's the actual for value gap. But we did react off that SIBI there, and we did get some reaction to the downside. So if my analysis is still right, then this would be sell side taken, smart money bought here. We do have like a big rejection block, so that could prove things as well. I'll just make it more clear. So we swept sell side here, -2, -2.5 standard deviation did get tapped into there as well, so we could just leave that. And this whole yellow thing is actually our accumulation. So we were, let's actually see from what candle it was. Yeah, it was a daily candle. So in this daily candle, we were 1 to like 3 days in this range. Fourth day, we're getting that manipulation, or yeah, accumulation we get here. Then this would be our manipulation, and then we expect our distribution, right? We do have all these liquidity, like these swing highs engineered. So we don't take this high here. We don't take this high here, or maybe we do now. We get that smart money reverse now. That could happen. But this high didn't take out this high. This high did take out this high, yes, but this high didn't take out this high. This high did take out this, yes, but this high didn't take out this high. So we do have all this engineered buy side liquidity there. So this could just be our low resistance liquidity run, or just our trend line liquidity. And then that standard deviation from here to here, I don't even know what this was, but I'm leaving that on there. And then targets are still valid for now. I've marked out this here. So we did, or actually it's already here. I could just move it up here because it's this is actually old. But we have this rejection block now, this pretty big rejection block. If you look at the biggest time frame where the previous candle didn't tap into, and where we have the biggest rejection block, so in the 18 hour, yes, this candle didn't tap into there. But if you like the 12 hour and the 18 hour, then it's the same here on the 12 hour. Is it? It is. And this one is bigger. So I'm using this reduction block. So could already move this here. Let's mark out this. Let's make this clean. Alright, so we do have this rejection block here. So we could tap to the consequent encroachment. We could go lower, but once we break this low, then targets are lost, and I don't see target 1 there. I don't see this buy side liquidity here. but it's actually pretty probable that we still, or it's actually more probable, I would say, that we go to here. We're kind of like accumulating now still. If you look at like the 1 hour, look at this. We had like a smart money reversal. You could say if this is a smart money reversal, but I do want to see this get inversed on the 1 hour. If we actually do want to see a smart money reversal here, it's actually pretty, I wouldn't say bad, but we did take out the buy side liquidity inside of this SIBI. So if this would give me more confidence, it would have been that we didn't take out this high yet, and then we get like a smart money reversal, but we don't take out that yet, and then we get like a retracement, and then we go higher. But look at this, we're just, what is this, like, look at like standard deviation, because this is a breaker. -2, -2.5 does bring us to the high of that inversion for rate gap. Doesn't mean anything to me though. -2, -2.5 does bring us to that high, so that's the external high which I want to see. That, so that could be one. If you look at like the B2C leg, -1 standard deviation doesn't really give me anything perfectly, so not that, but -2, -2.5 actually brings us to that consequent encroachment of that rejection block, so that actually looks pretty good. You could see a retracement off of there, so that could be good, yes, but then I don't want to see these lows get actually swept if that standard deviation is right. So we could still go to the rejection block consequent encroachment, but I wouldn't want to see that because we're already tapped into the rejection block consequent encroachment here, like many times. We will just create more liquidity here. So we just swapped that liquidity, yes, but we would just create more liquidity there, and I don't want to see that. We already like almost created like equal lows here as well. So that you could say that's sales liquidity engineered as well. You could say that, but I still think that we do want to go higher. But once we break this load, and targets are lost. So I'm gonna actually want to see what GBP USD does. I won't take any trades in it. I will take a trade if once we have this inversion for rate gap, or this SIBI inversed only 1 hour, then from there I could take trades into my drawn liquidity, which I have there. So once we have that broken, or once we have that SIBI inverse, then I would take trades. So from there I would just wait. Also more liquidity created here, but yeah, that's it for GBP USD. And then on gold, gold is actually going pretty crazy as well. Like, it's pretty weird actually. I don't know where I marked it out on, like the daily, I think I did on Twitter. Profile. Alright, so here. So this is gold. It is on the daily. Where was this? On like the 23rd? On the 23rd. On the daily. So it was on this candle, or this candle that was created. I set target 1, 2, 3. So we got a displacement lower. We got tapped into that. I don't even know what it was. It's actually an 8-hour order block. Why isn't it a 12-hour order block? We do have this imbalance. You could just say that it's off that SIBI or off that BISI. You could say that as well. If you look at like a singular for value gap, we have a singular for value gap on the 6-hour. Yeah, not on the 4 hours, on the 6-hour. So you could say that we have this on like the 6-hour. So we inverse the 6-hour, but we're still at their displacement higher. Yeah, you could say that, but if you look at like an order block, 12-hour isn't one because these for value gaps overlapping with that down close candle. Look at like a down close candle where the for value gap is above there. Then we do have this here, and look at the respect of the order block there as well. So this will be our order block. So we reacted off that order block. We got like a reaction to the upside, and from there it was just a really big run. From there, which is a really big run into the target 1. Oh yeah, also no, I said it was a rejection block. Oh yeah, it actually wasn't a rejection block. Look at like a bigger time frame. it was actually on the bigger ones. Yeah, likely 2 hour or 2 day, 3 day as well. So if we look at like a 3 day, then the consequent encroachment already got tapped in here. So we don't use the 3 day, but we use maybe the 2 day because the candle after that didn't tap into that consequent encroachment. On the 2 day it didn't. So yeah, you could say here we tapped into that rejection block consequent encroachment. That's actually what I marked out. And you're lying. No, I actually did mark that out. So here we do have the rejection block there. And then my mentor, or like my second mentor, Aiden, said rejection blocks are good if you know how to use them, but framing reversals off of them is crazy. So he's basically saying like, don't use rejection block as like your like market like your smart money reversal. Like, don't use that. You're basically betting against ICT. Basically, that you're saying that that is engineered liquidity for later, and basically that's exactly what I'm saying. So that's exactly what I was saying. So here, marked out rejection block on consequent encroachment. We tapped it there, and then we got a reaction to the upside. So it's not basically betting against the market. It's basically betting against ICT, basically, if you look at it like that. But tapped the consequent encroachment there. Why did I mark this out? I don't even know what that is, but all right. So I said later when we inverse this, and this is on, where is it? It actually is on the daily. So if we get an inversion off of this inversion for Ray gap, then I would anticipate target 2, target 3 as well. Even though we have the rejection block consequent encroachment, or basically when we inverse this for Ray gap, then we would already be at on top of the consequent encroachment. So if we get like a closure above here, then we would close above the rejection block consequent encroachment and above this SIBI, which would be an inversion. So you can look at it like that. So once we get that, then we get the target 2. But I look at it like this. I see like we have this pretty big wick. That would be on the 18 hour, the biggest one, I would say. Yeah, on the 18 hour would be the biggest one because we have a candle after that. We have a candle before that, but the body didn't tap into the wick there. So this would be our actual, not order block, our rejection block. So already in 4 hours, it could happen. Maybe next day, maybe we're already here and then the candle closes. That could happen also. But as soon as we close above the rejection block consequent encroachment of this rejection block, now you could already anticipate this to get closed above, and then you could already anticipate this high. So once we close above this consequent encroachment, then you could already anticipate this target 2. And then I would anticipate target 3 as well, because this would just be low resistance liquidity run again. And then target 4, you could say, is this rejection block consequent encroachment. But I never said that. We could just, yeah, this constant encroachment isn't for sure. We could just sweep this, and then, oh, it actually isn't that, but we could just sweep that and then go lower. This isn't for sure, but this could be target 4 if you look at it like that. But yeah, that's basically it. Then what I marked out as well, Bitcoin. We have that drawn liquidity. We just not even tapped into there, but almost. So that's actually, where is it? We look like a singular for value gap again. Why did I mark out this actually? Oh, that's a rejection block. Wait. Yeah, so on the weekly, it would be our biggest rejection block. So this is if you look at it like this, because it is a big wick is a imbalance. So it's like the same as a value gap. So market is like, how you say that, like it's like a magnet. Market is attracted to it, or like market is pulling towards imbalances. Market wants to fill imbalances. It wants to be balanced. Market wants to be balanced. So we do have this big wick, this constant approach, or this rejection block. So I want to see at least get a tap into that rejection block, because it's an imbalance. So that's why this is my drawn liquidity, and just an easy drawn liquidity, even though we do have like a singular for value gap on like I don't even know where it is. I don't look at it like, yeah, we have a singular value gap here in this whole leg, but I look at it like here. I don't want to see gaps even here, because this is the, if you look at like a bigger time frame, then this is just one leg, even in a bigger time frame. It's only 2 hour. Yes, we did already tap into that. What is it? That Sibi. We did sweep that, yes, but I still do want to see us turtle soup this actually, or like take this out. And that's just the whole idea, or like, I don't want to see this as the high. I still want to see us this high get swept again, and that's just whole based off the rejection block, and that will just prove that rejection block works, and that this rejection block, how I'm using it, works. So yeah, that's why it's still on here. Maybe people are thinking, yeah, I had it wrong. Maybe I do have it wrong later on, but yeah, I actually do want to see this Tron liquidity get hit later on, and then we're going to see us go lower into equilibrium and stuff. So if we tap equilibrium or even take out this low, because if we take out this low, then we'll go into equilibrium as well. But if we go to this low, then I was wrong with this rejection block, but I don't think I am, so we'll wait. So that's Bitcoin, and then we have what else did we had? We had crude oil. So oil. This was like where I didn't mark this out, but -2, -2.5. We do have this big rejection block. If we look at I haven't marked this out, but if we look at it like how I'm saying you should use it, then let's look. 18 hour here, big wick, daily big wick, but the body tapped into it, so we don't use that. 2 day big wick, body didn't tap into it, didn't tap consequent encroachment on the second candle after that, so we could still use that. 3 day, yes, this body tapped into it, so we don't use that. Weekly, yes, body tapped in here, and then from here it would just be lower. So where was it? Not on the daily, on the 18 hour. That's where the biggest rejection block is. So let's see. At the 18 hour, let's look how fucking precise that is. Look how precise that is. That's so crazy. So yes, we have a wick there, but look at the bodies. That's just crazy. So -2, -2.5. We did already tap that. Yes, we do have a big rejection block here. I'm seeing now. But I would still want to see it because we have a standard deviation from this A to B leg, and then also this this B to C leg. -2, -2.5 basically brings us from this range into equilibrium, optimal trade entry. So that's actually where I still want to see it. We just create more liquidity here, just more engineered liquidity. Yes, rejection blocks is to create more liquidity. So this would be our first target. And then from there, you could see this as like a short opportunity. So if we remove this now, or just leave that. But if you look at like the monthly, that's where it was. If we remove this A to B leg, standard deviation, so -2, -2.5 from the B to C leg, standard deviation brings us into equilibrium. Not optimal trade entry, but you could see that because we do have a really big rejection block on, like, I don't even know where it is, like the 2 month. So you have a big rejection block there, so that's where your entry could be. That's also where my entry was. So that actually could have been my actual target. But just a save, or like not save, when we get this target, then you would also get here. But this just looks more clean, or I don't even know what my idea was behind that. Maybe I don't want to see people like find out about themselves. I want to tell them like we do have a big imbalance there, so that's where your entry would be. If I just have like my entry there or target 1 there, then that would just scroll through time frames and see, oh, that's just bottom of that rejection block. I want to tell them myself. Maybe that was the idea behind it, but I don't know. But yeah, I did my whole analysis from like the 12 month to lower, and then this would be a short opportunity, and then target 1 would be here, and then target 2 would be here. So I would anticipate this to go into target 1. We get like a manipulation from here, and then we would go lower. So what was I thinking? Like somewhere like this, like something like this, and then we could go lower. So just really simple, something like that. That was what I'm really anticipating. So that's it for crude oil. And then for DXY, I'm actually wanting to see, look at this rejection block, consequent encroachment respect. We tap it there, just create more liquidity. We want to tap into that imbalance right here, that's SIBI, so that's our draw on liquidity. From there, I would want to see maybe this order block low or this order block mean threshold, and then from there, I want to see us go lower into sell side here and sell side there. But that's basically all it for what I posted and stuff. And yeah, maybe I'll continue this video in like the afternoon or like AM session for what we want to do with NQ. But if you don't see anything after this, then I'll see you like next time. Bye.